We are here on this amazing day. Okay, everyone, this is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family on Discord and Telegram. Families and friends will prosper. Let's pick up for business. Okay, everyone, we are marking up USOIL, United States Oil. So let's take a look at what's going on with US Oil. Okay, US Oil started off back in April of 1983. So we're gonna skip all of this all right here. I see a formation, so maybe we won't. Let's not. So right here, I see a double bottom, and this area is what pushed price action up to here. So what the market did, first leg, second leg, third leg, fourth leg, the retest happened here, and then we got the engulfing pattern, and then that's what pushed the market up. But the market came to retest previous areas of support, came back to retest previous areas of support, and then it broke back down into lower lows, which started to return back to, which it did, to come right back up to hot areas of higher highs. So I'm gonna just get out of here. The only reason I did that because I seen a pattern. If I see any more patterns, I will demonstrate what I see. But for right now, this is just the market just sitting at a very low area for years, and that was like back in 1980s, all the way to market. US Oil didn't break out to 2004. So around this area, clean breakout, or let's say the previous area. Okay, the clean breakout will be back in 05. So after 05, that's when the market started reaching new areas of higher highs. So this is where the party really begun. I'm trying to see if I see any formations or patterns in the market. Because everything is so small and tight, I don't really see anything, so I'm gonna skip it. So what I do know is that something happened here within this area that pushed this market back up to higher highs, and all it did here was just broke new levels, retest previous areas. Okay, I found a formation, so let me demonstrate. So this area here is what pushed this area here is what pushed price action all the way to the top, and it's probably the highest the market's ever been. So I'm going to demonstrate what I see. Market structure, here we go. So this will be the first leg of the double bottom, this will be the second leg, and this will be the third leg, and we got that long wick right underneath my mouse, and then the fourth leg came up right here. So the next, right on the side of my fourth leg, it looked like it's about a doji. So the market came back to retest, and the market pushed up to new areas of higher highs. It retested previous areas of once it broke the resistance, it retested previous areas of resistance that turned into support. It created enough momentum on top of this resistance line to push up again. It basically consolidated here for a few months, and then the market was creating enough momentum, and we see the green bullish pattern that engulfed the bearish pattern, so that showed that market is going to go up. The next candle was a doji, so we probably just would have waited because we didn't know the market. So once we had seen the doji is this red candle. Doji's meaning the market indecisive. So once we would have seen this, the market could have dropped, but it didn't. So the market did one more push up to new areas of higher highs right here. And this is back in January of 08. From there we have the bearish pattern. I should say we had the bearish engulfing pattern. The red candle engulfed the green, which showed that the market was going to drop. Also, what identifies the market drops is the wicks at the top. The wick shows that the market pushed up, where the red bar of this candle and the green bar of this candle closed out. This is where the market wasn't able to push up higher, so basically the market lost momentum and we had a complete drop. So the market actually dropped. So the market was trying to return back to previous areas of lower lows. It definitely broke previous areas of support. So let's say the market did return back to previous areas of lower lows. So now it's trying to get back up to new previous areas, or previous areas of higher high. I just said new previous. So previous area higher highs. So price try to return back to higher highs, but it only made it this far up. So within this area here, once it jumped into this section here, the market just basically consolidated. So we would have bought here, took it back up to the top. We would have sold here to the bottom. We would have bought here to the top. We would have sold here back to the bottom, and then so there's something's going on here. And I'm gonna demonstrate what I see. So I do see a double bottom in there, and this double bottom where the market tried to push up, and it did, because the retest came and then the market dropped. So what the market did was had go to double bottom, first leg, second leg, third leg, fourth leg, 1, 2, 3, 4 candles, 5 is the retest. So once the market reached here, the market basically just dropped back down with this wick. And then that's the retest, and the market shot back up to new previous areas of higher highs, because we do know most of the time at the double bottom, the market does retest and do create new areas of higher highs, which is here. Okay, so once we got that big push, the market actually returned back to highs, but we can see that the market broke here, but it dropped. It tried to break, or it broke a little bit and went back into the resistance, and it tried to break again, and then you can see it tried to go back to resistance, but it caught itself here. So it's some type of support area here that it grabbed. It created enough momentum. The market created enough momentum to try to reach back up to break this SR line, the resistance line. So if the market would have broke this resistance line, it probably would have returned back to previous areas as high as here. And if it would have broke this area, it would have turned back to here. But then that did not happen. The market dropped back down. So I'm going to demonstrate what I see. Okay, so I do see after the double bottom and the retest, I can see that the market right after the double bottom, it turned into a double top, and we were supposed to probably see a retest, but the retest looked like it never happened. Oh, it probably did. This could have been this doji right here. The market dropped. So I'm going to identify to you guys what I see. So this would be the first leg of the double top, second leg, third leg, and it's the fourth leg. This candle right here, it looks like a doji. This could be this has to be the retest area. If I go down the time frame, it probably look more like a doji or more like a retest area than it does here. But right now, it does look like a straight drop candle. Because of my experience, this is the doji, in my opinion. So this is the area where the market broke, that came back to retest, and the market dropped the previous areas of lower lows. So basically, the market went right back into the low. Okay. From there, the market tried to come back out of it. So we see the market's trying to come back out of it. It's creating that support. It's trying to break levels or return back to previous levels. Nowhere near. The market's coming back down. So it's headed right back down. And now the market's okay. Now we got to figure out what's going on. Okay. Before I tell you guys the direction of the market, let me show you guys something. So I'm going to circle this area right here. This area is very important. Very, very important area. This doji and this long wick. So I'll explain to you why this is important. This area here, we do know by looking all the way to the left, the market has returned back to previous areas of lower lows. Because this long wick happened, this just identifies that the market came all the way down to here. It wasn't able to close out, and if it probably did, it could have dropped down further, but it didn't. The area didn't close out here. The area closed out here with this red body, but we have all this wick. So basically, what the market did, lost momentum going down. So if it's losing momentum going down, that means the reversal's happening. The reversal did happen, and it's trying to go back up to return back to previous areas of higher highs. Okay, so I'm going to demonstrate what I see. There's also formation pattern, and I will let you guys know what's the overall trend. So here we go. The double bottom here, formation. First leg, second leg, third leg, fourth leg. That doji is the retest. A doji candle is a indecisive candle, which is a retest. And we do know most of the time after the double bottom, the retest will happen. The market will push up to new areas of higher highs. If not, the market can come back to previous areas of lower lows again. So if we had to identify our overall trend while we clearing the screen of our red markups, we are in a uptrend. Okay, so we're gonna clear our screen and we're gonna head back over to price action, and let's mark up in that area to see what's going on. So for example, we do see that we are in an uptrend. So we can grab the bottom of this wick, as sliced it right through the top. So we know price action here. Price extraction is trying to return back to previous areas high highs, which is over here. So we can slice it through price, to current price. Okay. So while we just did that, let's create our SR lines. The way we're going to do that is we go back to price action, which is this doji candle. So when we have this doji, we look over to the left to see what price is trying to break. So it's trying to break this area here. Once price breaks that, let's say if it goes up to the next level, how far would it go? It will be here. If price would go up another level, we're going to grab this inverted. We're going to grab this inverted peak here. So it's something that happened here. Okay, perfect. So what we're going to do is going to head down a time frame. We're going to do a top-down analysis, and we are going to be looking for. Okay, so price. Okay, there's something going on in here. Let me zoom in and take a closer look. Okay, so I'm gonna go back to the higher time frame, and I'm gonna add another XR line. Normally I don't, but I want to do it this time because I'm gonna show you guys something. So let's say if price broke, this SR line and then go up, and it came down. The next area we'll try to grab is this peak right here. So let's go down the time frame and take another look. Okay, much better. So now we can see that price. Hold on, let me mark this up because I want to make sure I see this very clear. Okay, so before I go back to price, let me show you guys what I see down here. The market was at lower lows. This will be the first leg, second leg, third leg, fourth leg. So that's the double bottom. The retest happened here. The market pushed up to new areas at high highs. From there, the market reset itself and did it again. So instead of doing a double bottom, it looked like it did a triple bottom, which is first leg, second leg, third leg, fourth leg, fifth leg. After the fifth leg, I don't see a retest. And most of the time, there's some type of retest that would happen somewhere in this area. But it did it differently. It actually broke all the way through, and this is where the retest happened at, and we had another push up to the top, another push up to the top, another push up to the top, and that's what price action at. So this is a little this is a little different. At least when we trade forex and the currency pairs, we don't really see this. So this is different. I'm used to seeing it. You guys, if you guys trade forex only, you may not be used to seeing it. So let's head back over to price action. Let's do some markups, adding some SR lines. Let's do a top-down analysis. I normally like to keep 3 SR lines, but today I have 4. It's cool. So we have a peak here that we're gonna grab. We have there's a peak here. I would grab this peak here, but it looks too close to the SR line. I don't want it to be too smashed up for right now, so I'm going to leave that alone. I'm going to look over to the left later on to see if in a few seconds to see if I see anything. But there's also another peak here. Sometimes you need to stretch it out sometime. Okay, yes, we can grab it. So it took me to stretch it out to see if I can get in there, because I don't want my SR lines too tight. I don't want them on top of each other. So this area is fine. Okay, there's also another area I just found. There's an inverted peak right here. Okay, there's another inverted peak here. So there's still a lot I need to add on. I can tell good things look real wicky in certain areas. Okay, also there's an inverted peak here. There's an inverted peak here. Oh, I grabbed that one already. This may be 2, so hold on. Okay, so I think I see an inverted peak and I also see a peak. So here we go. So here is the inverted peak. I'll grab this area here just in case. And also I will grab this area here. I want to grab this area here, but I'm not sure. But I'm going to grab it because I'm going to show you guys something, or I'm going to explain something to you guys about these SR lines when they are very close to get to one another. Also, there's another one here. There's a lot in this time frame. Okay, so I'm going to demonstrate what I see. So some of these SR lines that I added, and like I said, every currency pair, every pair will be different, or every market would be different. So when you're marking up your SR lines, when you got these SR lines, this is Forex 101. When you got these SR lines that you have to place and they're really very, very close together, we have to remember, or I want you guys to know that you have to look at these SR lines when they're close together, as in the market is going to have a hard time to break through when it gets to them, because you could think of it like a thick layer of a SR line. Okay, so this area here may be hard to break through because these layers are literally on top of one another. And I felt like I did it somewhere else, but I probably didn't. But this is the closest to SR lines, so this area may be a little difficult to break through. So once market price coming back down, it's coming down, so it may revert and go back up. So once it get back here, it may have issues to break this, but definitely in this section, something may just happen and go on. Okay, so what we're gonna do is let's go back to price action, which is this last doji candle, and we're gonna grab our rectangle, and we're gonna grab the highest high, which is this wick, and we're gonna grab it to the price action lowest low, which is this wick right here. From experience, I know we ain't gonna need all this room. The main action is gonna be down in this area, so I can actually drag this down, but I'm gonna do that later on. But before I do, let's stretch out our SR lines. I'm gonna explain to you guys how we're gonna trade the market. So that we trade the market by breakout and retest. So for example, if price is headed up somewhere in our uptrend like it is, we wait for price to get to our SR line. We will not take entry. We stop right here. We wait for the price to break our SR lines, to break our SR line, to come back to retest our SR line. And this is where we look for entry at, and we'll take it to the next level, which will be here for our TP. Once again, we will not take entry at our SR line. We wait for it price to break our SR line to return back to our SR line. We look for entry here. If we see it to go up, and we'll take it to our TP, which will be here. Okay, so let's clear this markups up, and let's go back to price action. Let's identify what is going on in the market. Like I said before, I did grab the highest high and the lowest low, but we're not going to need all this area. I'm going to explain to you why as we go down the time frame. Okay, so while being on this time frame, you see how I drew this whole big thing out here, but then truthfully we ain't gonna need all this. We only need this section here. So whatever the market is gonna do is gonna identify itself here. So what we're gonna do is we're going to redo our we're going to tighten up our rectangle. So we're going to go back to near price action candle, which is the green one, and let's grab the highest high area, and you can grab that wick or that whatever, just the tip of that. So this looks fine. Bottom to the high. It's just the area that's real close to together, like if it was consolidating. Okay. So as long as we wait here in the market would identify itself right here. So with me looking at the market, I don't know what is it doing because everything is so close together. So it's a waiting game for some type of pattern to form. I don't know if it's going to, I don't know what it's going to do. So let's figure it out. So when we got to identify what's going on in this rectangle, this is what we're going to do. We are going to head over to Google. We are going to type in Forex pattern cheat sheets. That's Forex pattern cheat sheets. And we're going to go to images. We will review the images of the patterns. You do not have to memorize the name of them. You just want to memorize what you see. And once you memorize it, or look back at it, whatever you guys have to do, the pattern will form itself in here. Once the formation happen, you guys will know and see if we can take it from here to the highest high, or take it where the market is going to drop back down. Okay, remember, we are still in the uptrend. I know right now price is not respecting my uptrend because I have went down a time frame and the market has got stretched out. But all we got to do is just tighten it up a little more, which is fine. So price broke through, went to previous areas of higher highs. Oh no, excuse me. Price went to new areas of higher highs to come back down to lower lows, and now market may be trying to come back up. So what we're going to do is going to head down the time frame to see if we can see anything more. Oh, perfect. So let me explain what I see. And we can tighten up the rectangle a little more. And this is the most important area right here within this rectangle. Okay? And I know you guys see it, and I'm going to explain it. The formation, and this market may just give us that push up to the top eventually. Here we go. Double bottom. First leg, second leg, third leg, fourth leg. That red candle is the retest. We have to wait because we don't know how far that red candle is going to go down. We have to look for some type of engulfing pattern from the bulls to take it up. If not, the market can come back down a little bit, retest something in the previous areas over here, and then the market can shoot up. So when the market shoot up, it's going to return back to previous areas of higher highs before it goes break through this rectangle to go back to new areas. To go back to previous areas of high highs, because market's trying to return back here. Okay. So let's say if market did exactly what I said it's going to do, and it has happened. So let's say market is trying to return back to this area of support, and the market came back down to this SR line. So we'll be looking for some type of entry. Okay. So if price came back down that far or further, because it can come down to our it can come down to our trend line, respect our trend line, and come back up. But let's say it's going to come down this far because it gets respected here in this area, right? If we had to put some numbers on the screen for entry, this is not in play. Just give you ideas how to set it up. We will be taking entry here, and we can take it up to new area. Previous areas of higher highs. You can take it up to your rectangle. You can take it up to your SR line. You can take it up to your you can do SR line to SR line. But for right now, let's do SR line to SR line. So if price breaks this SR line, it heads up. That'll be 55 pips on the way up. And we got to put a little drawback. So with this is something you definitely want to extend, because the ratio number can be extended, because the TP is less than the stop loss. So instead of just doing that, why won't we just take it to the next level up? So we can take it right here, and that looks a lot better. I actually will bring this up to about here. and that's perfect. So for a trade like this, if we did find entry at the price came down to retest something in previous areas, and once we see that engulfing pattern, we can take it up to previous areas a lot higher highs. It could be this level here or our top of our rectangle. And this is amazing trade, everyone. We are looking at 110 pips to the top and 38 pips to the low, which is an amazing trade for US oil. Okay, everyone, this is Cam Jones, FX Daily Analysis. Thank you for watching, and thank you for your attention.